Hey everybody, this is Rick with AmazingAccuracy.com, and today is February 6, 2024. It is currently 8:37 p.m. Chicago time. Okay, this is a follow-up video to the one that I did not too long ago. And what I wanted to do is kind of go over what was discussed in the last video, how things had turned out, and give you a follow-up on how things look as they are turning out. Okay, we're currently looking at the weekly chart of the S&P 500 Mini. Now, what I want to remind everybody is, if you haven't already, to go back to the previous video and watch that. I had shared this little note right here that I keep underneath my mouse pad. And as a reminder, we were expecting a weekly swing for the 112 period, 112 period. And usually when I'm expecting a cycle turn based on these dates, I like to see an actual, the market go up and change trend and go down and so forth. But this has been one rip-roaring market here. And look what happened. Here is where the cycle turn was expected. This here, if you see my mouse right there, that is a weekly swing top for week ending 1/5. Then it came down and it made a bottom for week ending 1/12. Both of these, the top and the weekly swing bottom, both occurred within the cycle date that I had provided you all. Now, I did not know, of course, nobody would have known that we were going to get a weekly swing turn and then another weekly swing turn, thus ending the correction after only 1 week. Normally you get a correction, you go down 38%, 50%, 62%, whatever. But when you have a strong market like the one we've been in, it says, I have no time for these retracements. I'm just going to end this one really quick. And it did. Found support here on the square support and headed back up. Now, here's something important. The actual calculation or the actual analysis that I had on here was spot on, because I was expecting a weekly swing to occur, and instead of getting one, I got two. And it happens sometimes. Now we come to the next one. If you recall on here, and I had provided you all with all this information, you'll have to go back to that previous one if you want to actually see the paper itself, because I actually provided you an image of it, but I'll read it to you here. It's week ending 2/9, and then I have a little minus sign next to it, which means that it could be 2/9, week ending 2/9, or 2/2 within there. Now usually we have a 3-bar window, but in this case I just kind of put a little note here with all my pencil markings stating that the evidence appears to look like it'll either be on time or 1 bar early. Take a look at last week. This price bar right here is week ending February 2nd. Now February 2nd would be Friday of the week. All these price bars here on the weekly time frame, the date, if you look down at the very bottom here, okay, those dates are the Friday dates of these bars, just so you know, because in TradingView, they use Monday's date, and on my charting software, I use Friday's date. So just so you know, and right here is week ending February 2nd, which was Friday of last week. The week ended on February 2nd. Now that is the first bar within this next weekly cycle, expecting another weekly swing turn. And so look at where the high is here. It hit right on the top of the Gann squares. These are Gann squares. right off of the bottom here. That was October 27th, 2023, week ending October 27th. And so anchoring it here, my software calculates all these 90 degrees. Each one of these are 90 degrees. So this is a full circle, 360-degree move from bottom to top. Okay, these are the kind of methods I like to use. A lot of Gann stuff and Fibonacci stuff and all this stuff, and that's what's in my book. And you can learn all that stuff if you get that. Anyway, right here, as you can see, the high of last week just nailed that top of that square right there. Now you can tell the validity of this square when you notice that, for example, when it made the correction, look where the support was. Right here on this Gann support line, the square support line. Notice that as prices rose, that last week the low hit the square support, the high hit the square support. And it's also the entryway or the first part of this overbought level. Okay, down here is oversold. Here's a short-term oversold. And right here, it's right at the doorway of overbought. So you not only have it right at overbought, but you have it at square resistance, very strong resistance. And then we add, of course, that we are expecting a weekly swing top to occur within the window of 2.9. So in my previous video, or the 2 videos ago, I had explained that when you have a bar or a date, like let's say this one right here, this top, which was week ending 7/28, it looks like, 2023. Okay, on the report, it could be any one of these 3 right here, because the window is going to be plus or minus 1 bar. All right. So in this case here, I'm very confident that we're looking at either 2.9, which is this week, or the week prior, which is week 2.2, which has of course already completed. I do not expect 2.15, though I'm going to say now that even though 2.2 is at resistance and it overbought, never say never. There's always that possibility that the market will go to the next resistance level on 2.9. And it's also possible that it can go to the next one on 2.15. So, there's, I don't know, would that be 2.50? It'd be 2.16. So I'm not going to say, yes, this is going to be the top. What I'm saying is the probability of a weekly swing top based on last week's high is very high. There's a high probability. Is it certain? No, it's not certain. All right. So of course you're going to want to get on your daily charts. You're going to want to make sure that you confirm the swing. You want to break below your support lines, your previous swing bottoms, whatever it is that you personally like to use to confirm that you have a change occurring. But this is very compelling, so I thought I'd go ahead and share that with you. And as you all know, or if you haven't watched that last video, following the weekly swing, and I hope that if we get that weekly swing top, because you always have to start with a top if you're moving up, that we don't end up with a weekly swing bottom immediately after like happened here, but we actually get going to the very next cycle date, and that's in March. All right. And that would be within the first, it would be March 1st, week ending March 1st, or the week after, which would be week ending March 8th, because I put a little plus there, 3-1 plus, meaning 3-1 or 3-8. So anyway, write that down, take note. But there you go. I highly believe, especially because of seasonals, that we should be seeing prices declining into March, which is usually what we would expect, especially during a presidential election year. And normally, however, the stock market tends to make its top in the middle of February, but it can occur early because it can do whatever it wants. And then usually we'll then proceed down and bottom out in March. And then for the rest of the year, for the most part, there'll be some pullbacks along the way. Expect a pretty bullish 2024. At least that's what I'm expecting. There's a lot of doomsayers about the stock market. Yeah, that time is coming. I don't think that time is here. I think it's going to be more in around 2026 that we'll see the big major bear market happening, but not for this year and not for 2025 as well. Anyway, well, that's it for this analysis. I hope you liked this video. If so, please give me a thumbs up. If you haven't done so already, please subscribe and click the notification bell so you'll be informed of my upcoming videos, as I will keep you informed of these upcoming cycle swings in the stock market. Thanks for watching. Bye.